Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 193. Hi, I'm your host, Jacob Ayers. Thanks so much for tuning in to this week's Friday Fundamental. Hey, it's a great Friday, and I'm so glad you're tuning in to this week's episode. Well, before we get started, I want to give a quick shout out to a 5-star review on iTunes from Bridget that says, fantastic content, great questions, and insight on how to take life and business to the next level. Hey, Bridget, thanks so much for that review. I'm so glad you all are getting value from this podcast. Thanks so much for your kind words, your awesome reviews and ratings on iTunes and all those other platforms. So thanks so much for that. Well, hey, let's get into this week's Friday Fundamental. This week's Friday Fundamental is the BRRRR strategy. And I know many of you out there have heard of this strategy and maybe even implemented it yourself, but I wanted to dig into it today, kind of explain exactly what it is, some of those intricacies, and even provide a real life case scenario. So without further ado, let's jump into this week's Friday Fundamental. Building wealth, as you know, in real estate is entirely possible. Usually the question is just how quick? There are many different ways one can invest in real estate, from buy and hold single-family homes to note investing and private lending to syndications and so many more options. Well, if you're a beginning investor, you might realize that a limiting factor to buying real estate is your own capital. There are creative ways you can get around this though, from partnering with others to generating capital by fixing and flipping properties to the ever creative BRRRR strategy. Now, as far as I know, this BRRRR term was coined by my pal and host of the Bigger Pockets podcast, Brandon Turner. So first, the acronym, BRRRR. Buy, rehab, rent, refinance, repeat. The first step of the process is to buy a property that has value add potential, meaning you can increase the value with repairs. The next, rehab, is the phase where you start to add value to the property with repairs, upgrades, and such. And then, once you have rehabbed the property, you're now ready to rent it out to good, qualified tenants. The refinance is a transaction that allows you to pull out that equity in the property that you've built up by rehabbing it. Oftentimes, you're looking to secure a long-term fixed-rate loan. This loan will pay off any existing loan on the property, and the rest goes in your pocket. And finally, repeat. With that extra money from the refinance, you can repeat this process with another property, completing the BRRRR cycle. With that, you have fully completed a BRRRR strategy, ready to do it again and again. The BRRRR strategy is phenomenal, especially for those who are willing to put in some sweat equity. The returns on that sweat equity can be great. Let's look at a case study. Sarah is interested in buying her first investment property. She has identified a couple markets close to her home and has an idea of what property she is looking for, a 2 to 4 unit specifically. Sarah finds an off-market deal through a really creative and unique way, but we'll get to that in just a bit. Now, the property is a duplex in the neighboring town. It's completely vacant and looks a bit rough on the outside. The interiors are rentable, but could certainly use some TLC to demand the market rents. So Sarah finds the owners, who are siblings who have inherited the property and want to sell, rather than be landlords. They strike a deal, and Sarah agrees to purchase the property for $55,000. Knowing that each unit will rent for approximately $600 per month once rehabbed, Sarah is feeling pretty good about the deal. She goes to her local bank to get a loan for the property. Now, given the relatively low purchase price, she is only able to get a 15-year loan at a competitive interest rate of 3.375%. Her mortgage payment is $387 per month. She had to put down $11,000 to purchase this property. Now, over the next couple months, Sarah, with the help of family and friends, i.e. mostly her dad, focus on rehabbing the interior of the property. After putting in some sweat equity and getting the interiors rehabbed with fresh paint, new fixtures, replacing and cleaning floors and carpet, etc., Sarah finds tenants for the property. Each unit rents for the expected $595 per month. With the property fully occupied, Sarah and her team, i.e. her dad, turn their attention to the exterior. They repaint, landscape, and drastically improve the curb appeal of the property. The tenants really appreciate this too. At this point, Sarah has bought the property, rehabbed it, and rented it. You can probably guess the next step. That's right, after approximately 18 months, Sarah has realized that this once vacant and ugly $55,000 duplex is now looking quite nice and has 2 paying tenants. Time to go back to the lender and talk about refinancing options. The property appraises for $110,000, twice the amount Sarah paid for it just 18 months ago. Sarah is pleasantly surprised to find that she has a good amount of equity she can pull out of the property and reinvest. So she refinances the property and secures a new loan. This time, a longer-term loan of 30 years with a newly adjusted interest rate of 5.65%. Since Sarah went from a 15-year loan at $55,000 to now a 30-year loan of $110,000, her mortgage didn't change too much. Her mortgage payment increased from $387 per month to $556 per month, leaving her plenty of cash flow every month. Sarah was able to pull out about $35,000 of equity from that property, which she invested in yet another investment property. After all, this strategy is working out pretty well, so why not, right? Now, this is a real scenario with real numbers. I know because I am Sarah in this scenario. Yes, this duplex was my second real estate deal I ever did, and it provided me the capital for me to do my next deal. Now, when talking about the BRRRR strategy, there are some things to note and be aware of. First, you will have an increased mortgage payment. When you refinance to a larger loan, your mortgage increases. As a cash flow investor, you have to make sure that the rents can support that higher mortgage. With the higher property value usually comes higher property taxes and higher insurance as well. So make sure that the numbers still work out for those increases and expenses. Next, the loan to value. It's important to note that you often have to leave more than the traditional 20% equity in the property. With Fannie Freddie loans, specifically with duplexes, you must maintain 30% equity in the property, or a 70% loan to value ratio. For example, if you refinance your property for $100,000, the lender will only loan $70,000 in this scenario. So make sure to talk to your licensed lender about the details before you get too far into the refinance process. Well, real estate investing done right can and will help you achieve financial freedom and build wealth over time. So have fun with it. Be creative, and remember, your mind is the only thing that will limit you. Well, that wraps up this week's episode of Friday Fundamentals. Hey, I really hope you're getting value from this podcast. If you like what you heard, please go over and leave a rating and review on whichever platform you're listening on. As always, for more information, resources, and to connect with me, visit www.jacobayers.com. Till next week, engineer the lifestyle you want.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.